Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for May the 23rd, 2019. And we had a down day in the market, not just a down day, but a trend day, one that broke away from our triangle. In Tuesday night's video, we were discussing this breakout play or breakout plan from these compression levels. Well, that's what finally happened, not on Wednesday, but on Thursday. With these levels that I drew, these little price pathways, taking us away from 2850 down into 2811 gravity, and just above the round number 2800. So that was a fulfilled play on a range breakout from a triangle position. Let's take a look now at our volatility charts and get a bigger perspective of the S&P as we'll talk about the feature of tonight's video, which is retail names. Big box retailers, some are going up, others are going down. That's mainly after Target and Lowe's had their earnings this week. First, we will take a look at the S&P 500. This is a repeat pattern, as we've been looking at, from this September into October 2018 period. Negative divergences, break and fall. Negative divergences, break and fall. But this time it's all about 2800. If the market can hold this, bulls can rally us up here. That's going to be a this time is different scenario. If they can't, into Friday, we have a holiday weekend, into next week, we'll see how they can hold this level or fail to hold this level. The big trades and the plans and positions and management comes from whether or not 2800 and the S&P holds as support. If not, we do have a multi-day, maybe a few week position play to the downside. That's the bigger picture in the S&P. Let's look now at the broader retail sector, which is our consumer discretionary. It's an ETF, XLY. This is broader than just retail, but we can see it also making new swing lows beneath this 113, 112, 115 thereabout level, and it is breaking through daily moving averages. We're again making comparisons, not that the future will be identical, but what's happening here gives us at least a little bit of guidance for potentially what might happen into the rest of May and into June. So that'll be the focal point to watch, is about this 112 per share level. Again, the volatility grid, for those that are new to the method, this is where the probability of expiring cone takes the implied volatility or the price levels into the future. And that's mainly off the trade grid and option premium, option pricing, and option metrics. It just gives us a cone, and this cone is about one standard deviation. It does give good guidance if you're looking to sell premium, typically in higher implied volatility environments. These percentile ranks and percentiles help make that decision, or in low volatility environments. In low environments, we typically are net buyers of options for the future, or if high volatility, we are net sellers. And then we look at the ATR. ATR is just a day trader's way to look at stops, targets, or what to expect from short-term trading. And of course, our good friend, implied volatility. And from there, let's go ahead and take a look at a few individual names. We'll start with Costco. Now, Costco is in a higher volatility environment. That's mainly because earnings are coming up. That's May 30th. You're going to see the price of options across the board for Costco increase. Implied volatility, not so much for the next session, that's Friday, but into next week. Not a lot, 35% implied volatility, but if you are putting on positions or looking for positions, note that implied volatility is higher because earnings are coming out at the end of the month. So the position is for bullish trades or bullish plays, bull flag, that's already achieved its target, which is the prior high at about the 248, 249, even 250 per share level. This is going to put us into a caution zone. Just like the market, it is into new highs. We typically do go with the trend, so we look for something that is making higher highs and expect it to make even higher highs, and we put positions on pullbacks. Costco, I'd wait for its earnings to come out and for what reaction is to play there, unless you prefer to play into an earnings environment. Unlike Costco, Walmart, which also includes maybe Sam's Club, just had its earnings. Note that volatility will rise consistently before an earnings announcement and then fall quicker after the announcement. So that's what Costco is up against. There may not be any reaction, or at least a large reaction, and so that volatility premium will dry out. Nonetheless, what is the logic for retail name Walmart? Again, we have this rising stair-step pattern. Will update our trend lines, and it is this higher high, higher low, higher high, higher low, retest the high, higher low. It is in a rising parallel trend line channel, and if you are looking to play into that, this is why I like to use the probability of expiring and just add simple trend lines. Because if the stock does continue as it's going, no guarantee of that, of course, that takes it up to the upper periods or upper portions of the probability of expiring calculator. And that gives you a little bit of an edge if you're looking to buy or even sell a premium within that zone. Next, we'll take a look at Target. Now, Target had a positive reaction to earnings. Again, same thing, creep to the upside in volatility, creep to the upside in range. And that's just taking it to a gap and continuation to the upside. That's, of course, affecting our probability of expiring cone and any open positions in Target. It has reclaimed and traded back above its 20 and 50-day moving averages. That puts Target with volume and momentum into the bull zone, taking it to about 83 or 84 per share. Of course, for any stops or protective plays, if the share price goes under 76 and 75, well, that'll open an alternate thesis sell swing pathway. But for now, it does have a bullish potential to go higher, and we would prefer to trade those on pullbacks or retracements. Not all is well in big box retail land. Lowe's, similar I guess to Home Depot, did a failed earnings or missed earnings and has gapped lower for 2 trading sessions. This broke the rising trend line, broke it on high volume, and has additional potential to go even lower to about 85 per share. But price doesn't normally go straight up or straight down, so we like to take positions on pullbacks or retracements. Nevertheless, Lowe's is into a danger zone or a drop zone, taking it to 90 per share at a minimum, maybe even the prior low from late 2018. That's at 85 per share. Now we can look at Home Depot. Unlike Lowe's, this actually rose. So we have a 2.27 per share earnings call. Again, that volatility creep and then fall after earnings. Not a lot happened, and Home Depot has remained inside, or I guess returned in, as it were, beneath its 193 support level and is back inside a rectangle. So watch this closely. There's not a whole lot of trading potential here as it is trapped between 2 levels. Short-term or intraday traders may trade this, but longer-term position traders look for longs or buys above 195 or beneath 180. That would be a short sell position, but until then, we probably have additional chop or range contraction. We'll finish up with Best Buy, which is into a flag, bear flag. This is why we like to trade retracements, and it is a good example of why short selling pullbacks tends to be a good strategy. This is a breakdown on high volume, new momentum low, and this is our flag up into this 20 and 50 exponential. That's a good place to be looking to go short, and that did result in a downside play today. Sure, it was earnings, but nonetheless, that was a good example of why we look for retracement trades, not buying at highs or shorting at lows. Manage risk through pullbacks or retracements. So Best Buy as a retail name is in danger of going even lower. That's taking it to 60 per share, and if under the 60 per share pivot, even lower than that. But as always, we'll be watching these names in the retail sector, big box retail stores, and how they perform with the broader market and in individual positions. Some are bullish, some are bearish. They're not all moving the same way, and that does give us opportunities to trade those movements. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for May 23rd, 2019.